Hello guys, so today we will discuss cash flow statement. This is in continuation of our previous class. As I requested all of you, please go through the format first. Please go through the format. Please go through our previous video for understanding the each and every item. So, and also you have to understand the meaning of cash flow statement, purpose of cash flow statement, and what is operating activity, what is financing activity, what is investment activity. Please go through our previous videos, part 1, part 2. This is part 3 video. So I am going to work out the problems from your suggested answers. Actually, I am going to work out problems from the suggested answers. Why? Because this institute material problem is most of the problems are very lengthy in nature, and the examination also examination point of view, you can prefer suggested answers problem, that is your past examination question and answers problem. You prefer similar type of questions only they are asking in examination also. So majorly I will prefer the suggested answer. Will also work out 1 or 2 problem from the institute material. Okay, so the purpose is examination, they prefer the preferences for your past suggested answer. Similar problem they are testing, and for all these things basic is format. Presentation is very important for cash flow statement. So I request all of you to, so please go through the format. Why I am discussing from the this suggested answer is examination point of view. Similar type of questions will be tested in examination mostly. So before that, please go through the format. I'll just revise the format once again. So net profit for the period before taxation and extraordinary item. This is from the accrual method. This is from the P&L. From your P&L account, you have to take the net profit. That is before taxation and extraordinary item. If it is after tax, then we have to add taxation also to arrive the net profit before tax figure. Then adjustment for non-current. It is not non-current. It is non-cash and non-operating item charged to P&L. So why we are adding non-cash and non-operating item? Because cash flow statement is divided into 3 categories. One is operating, another one is investment, another one is financing activity. So if anything is non-operating activity that I have to eliminate from my operating activity, then I will consider in my financing activity or investment activity. That is why I am eliminating the non-operating activity. Another item is non-cash item. Why I am eliminating non-cash item? Because I am going to identify cash generated during the year. How much cash I generated from my operating activity during the year. That is why I am eliminating non-cash items. Okay, so depreciation is an operating expenses, but it is a non-cash expenses, so I am adding. If I add my expenses, why I am adding? Because it is already deducted my net profit. It is already deducted in my P&L account. So I am adding. Why I am adding? Because I have not spent anything. Cash, there is no cash expenses. So I am adding. So my profit will be increased. Interest paid. It is not interest paid actually. This is interest expenses, not paid. Interest expenses is different from interest paid. Interest paid means actually how much you paid, cash outflow. But in P&L account, interest paid is not debited. Only interest expenses accrued during the year is debited. Interest expenses accrued during the year is normally debited. Okay, interest paid is a cash outflow. Interest paid is different from interest expenses. Okay, interest expense means what is debited to P&L account only added here. What is debited to P&L account is added, because net profit is my opening balance. Net profit is arrived from my P&L account. Okay, then foreign exchange loss. Foreign exchange loss, book loss. If it is a book loss, then add it. Then loss on sale of fixed assets. It's a non-cash loss and also non-operating loss. So it is added. Okay. And what about deduction? Adjustment for non-cash and non-operating items charged to P&L account. If it is an income or non-cash income or a non-operating income, then we have to less it, because in profit this income is already included. Because of this profit, because of this income, the profit is increased. I have to reduce from my profit. Why? Because I am arriving only operating activity. Non-operating activity, non-cash item should be ignored, eliminated. So that's why interest earned is an operating activity, non-operating activity. It's a non-operating activity. It is a financing activity. It is a financing activity or investment activity. This is investment activity. Why? Because only if I invest, then only I will earn interest. So this is investment activity. So I am eliminating from here. Dividend earned. When I will earn dividend? If I invest in shares, I will earn dividend. So this is not an operating activity. This is an investment activity. Profit on sale of fixed assets and investment. Why I am deducting? Because this is not an operating activity. This is non-operating activity. This is investment activity. Part of investment. If I invest, I have to sell one day. So if I sell, that is not an operating activity. That is an investment activity. Then you will get operating profit before working capital changes. After that, as I discussed in previous class, we have to add if there is an increase in current liability. We have to compare previous year balance sheet and current year balance sheet, and difference we have to check. If it is an increase in current liability, then add it. Decrease in current asset, add it. Likewise, we have to do it. After these things, you will get cash generated from operation. From that figure, you deduct income tax paid minus income tax paid. Then any proceeds from disaster settlement. Insurance claim, you got any money from insurance, then add it. If you repaid anything, government grants, if you refunded anything, if you receive any government grants, add it. If you refund the government grant, refund the government due to non-fulfillment of conditions, then deduct it, not add. If anything is an outflow, add it. If anything is an outflow, deduct it. If anything is an inflow, add it. Okay. After doing this thing, net cash flow from operating activity will come. Okay. And also cash flow from investment activity, financing activity, all these things very well discussed in our previous class. Just go through our previous class. Now what I am planning is, I am going to work out the problem from your suggested answers, from the institute suggested answers. I am going to work out the December 2019 problem, cash flow statement. I am going to work out the December 2019, syllabus 2016, December 2019 attempt, suggested answer. Question number 3. I will give you the link below to this video. I will provide you the link. You please click the link. This PDF will open. Okay. You please go through the question. So this is December 2019, syllabus 2016, and the question number is 3A. Okay. Just go through the question first. The following figures have been extracted from the books of M Limited for the year 2019. In 2019, you are required to prepare cash flow statement. Okay. We have to follow indirect method mostly. We have to follow indirect method. I am going to discuss indirect method only. I am going to discuss indirect method. By going through the question itself, you can understand this is indirect method only. We can do this problem. Direct method is not possible. Few problems only both method is you can work out both method. But most of the problem you can work out by only indirect method. Okay. Because that approach is different. Direct method is different from the indirect method. Okay. We will discuss that later. So now you just go through the question. This is M Limited thing. They are asking us to prepare cash flow statement. First item, net profit before adjusting income tax. Net profit before income tax figure they have given, but after taking into the following items. Net profit before tax is given. Net profit before tax is how much? 10 lakh rupees. That is your opening balance. So what I suggest is, so whenever you are reading the question, you should think first what type of item it is, whether it is a cash item or non-cash item, and also we have to think whether it is a financing activity, operating activity, or investment activity. What activity it is, what is the nature of item. So all these things we have to think while reading the question. So net profit before tax is 10 lakh rupees is given in the question. Then depreciation on assets 2,50,000. So depreciation is also given. 2,50,000 is the depreciation. What is the meaning? Depreciation is an operating expenses, but whether it is a cash expenses or non-cash expenses. Depreciation is a non-cash expenses. So non-cash expenses should be added. Non-cash expenses should be added. As of now, we will think like this. We will think like this about each and every item. Then we will work out the problem. Then what about the next item? Discount on issue of debentures, written off 15,000 rupees. Write-off expenses. Write-off expenses means already incurred. Now we are writing off in the books of accounts. Present year nothing is incurred. It is already incurred or already we have accounted. Now every year we are debiting from P&L account one amount, amortization. Okay. So 15,000 is also a non-cash expenses. Non-cash expenses debited in P&L account. That we have to consider non-cash expenses. Then what about next one? Interest on debentures paid. Interest expenses. Interest expenses how much? Interest expenses 1,75,000. We have to go through the question also fully, because here they have given interest on debentures. Interest on debentures paid, they are saying. Paid is different from interest. Interest expenses is different from interest paid. Interest expenses is actually debited to P&L account. Interest paid is actually paid to the debenture holder. Both are different. Sometimes interest expenses equal to interest paid. Sometimes if there is any payables, opening payables, closing payables, then we have to check. We have to check the balance sheet also. Then only we can consider. Then only we can finalize. But as of now, interest is an expenses. It is not an operating expenses. It is an what expenses? When you will pay interest? When you borrow money, you will pay interest. If you borrow money, then what is the activity? What is the nature of activity? It is a financing activity, fund arrangement. So this interest is a financing activity, not an operating activity. So we have to give some adjustment. We have to do some adjustment. Then what about the next one? Book value of investment 1,50,000. Sold for how much? 1,60,000. So book value 1,50,000, sale value 1,60,000. Difference is how much? 10,000. 10,000 profit or loss? It is a profit on sale of investment 10,000. But whether it is an operating income, non-operating income, it is a non-operating income. So we have to give some effect on the as per our statement. We will work out interest received on investment. You got an income credited in P&L account 30,000. Whether it is an operating income or non-operating income, it is a non-operating income. When you will receive interest, when you will receive interest, when you invest in when you invest in debenture, you will receive interest. When you invest in some bonds, you will receive you will receive interest. So this 30,000 is a non-operating income. We have to give some adjustment for this. What is the next item? Income tax paid during the year. As per our format, we have to give some adjustment for this. Then what? 7,500 preference shares of 100 each were redeemed on 31/3/2019 at a premium of 5%. They repaid the redemption of preference shares. Cash outflow. What activity? It is? Issue of shares, which activity? Issue of shares is which activity? Financing activity. So redemption of shares is also financing activity. What is the next one? Further, company issued 25,000 equity shares of 10 each at a premium of 20% on 2/4/2018. So 25,000 equity shares also they issued during the year. What activity it is? Raising money, what activity? Arranging funds, what activity? Financing activity. I am issuing shares means it is a financing activity. Dividend on preference shares were paid at the time of redemption also. Payment of dividend, what activity? When you will pay dividend? If you issue shares, you will pay dividend. So dividend is a financing activity. Okay. Then what is the next item? Dividend paid for the year 2017-18 2,50,000 and interim dividend paid for 1,50,000 for the year 2018-19. So both these two items are happened in 2018-19 only. Assumption is These two items is happened in 2018-19 only. So we have to give some effect. Then what? Land purchased on 2/4/2018, 1,20,000. They purchased land of 1,20,000 rupees. How they purchased? For which the company issued 10,000 equity shares of 10 each at a premium of 20% to the landowner as a consideration. So they purchased 1,20,000 rupees land, but they did not pay cash. They did not pay bank account. They issuing shares. They did not use the cash or bank. They are issuing equity shares on behalf of equity shares. On behalf of equity shares, they received the land. So no cash transaction. Equity shares they issue 10,000 into 10, how much? 1 lakh. 1 lakh plus 20%, 1,20,000. 1 lakh plus 20%, premium is 20%. So 1 lakh plus 20% is 1,20,000. They are issuing equity shares. On that they are not receiving cash. Company is not receiving cash. Instead of receiving cash, they are receiving asset. That is land they purchased for 1,20,000. Okay. What is the next item? Current assets and liability. Why they are giving this item? Because as per our format, one of the thing is changes in working capital. Changes in working capital we have to consider. We have to consider changes in working capital for the purpose of cash flow statement. So just go through. Next item is fifth thing is current assets and liabilities. This will be useful for working capital changes. All of you will be knowing about working capital. So working capital is the capital used for running the business. Amount is used for business, running to operate the business. We need some money. That is working capital. So that working capital is invested in our working capital will form of these items actually. We have to understand which one is working capital, which one is not working capital item. What is the first one? Stock. Stock is a working capital item only because that is used for business purpose. Okay. So previous 2018 6 lakh, 2019 6,59,000. Increase or decrease? Increase in current asset. Stock is in current asset, correct? Whether it is an increase or decrease in current asset. Increase. How much increase? 6,59,000 present year, previous year 6 lakh. So 59,000 is increased. Increase in current asset. Increase in current asset. What we have to do? Reduce from your operating activity. Minus. Increase in current asset, reduce it. What is the next item? Sundry debtors is a working capital item or not a working capital item? It is a working capital item. What is the amount? 1,04,000, 1,06,550. Increase or decrease? Increase. How much increased? 2,550. Correct? 2,550 is increased. Increase in current asset, reduce from your operating activity. Then what is the next item? Cash in hand. Cash in hand. Cash in hand you have to ignore. Cash in hand you have to ignore. That is because the reason of cash flow statement is we have to prepare opening cash balance during the year. How much cash flow movement? Opening cash balance plus during the year cash flow movement equal to closing cash balance. We have to get this answer. 98,150, 17,650. After our workings we have to get this answer. What is the next item? Bills receivable. Similar to debtors, you have bills receivable. It is also a current asset. That is also a working capital. Increase or decrease? Decrease. Previous year 25,000. This year 20,000. Okay. So previous year 20,500. This year 20,000. Reduction in current asset. Decrease in current asset. Decrease in current asset should be added with your operating activity. What is the next item? Sundry debtors is a part of working capital. Current liability. Sundry debtors is a working capital item. So current liability. So 83,000 previous year. This year 85,650. Increase in current asset. Increase in current liability should be added. Why? Because you have not paid your liability. so your cash balance will be increased. Outstanding expenses. Outstanding expenses. Previous year 37,500, this year 40,900. Increase in current liability. Add it. Okay. Increase in current liability. Add it. So with this understanding, we have to work out the problem. With this understanding, we have to work out the problem. So all of you, please go through the format, indirect method format, cash flow statement format before starting working out. Just go through, that will be helpful. So all of you, please go through the link given below. December 2019 suggested answers, please download that link. So under that question number 3A, just go through the question number 3A. I am going to solve the answer. You also please go through the format before going through this answer. Go through the format also, so you will understand. Okay. So as per the question, as per the format, cash flow statement. What is the first activity? Cash flow from operations. That is the first activity. What is the first thing? Net profit before tax and extraordinary item. It is given directly in the question. Extraordinary item, ignore it. No information on extraordinary item. But it is given in the question clearly. It is net profit before tax. So we can write the item 10 lakh rupees. 10 lakh rupees is my net profit before tax. Okay. So then what else? As per the format, adjustment for non-cash and non-operating item. Add means if it is a non-cash expenses and if it is a non-operating expenses, we have to add it. Why? Because that is not related to operational, because non-operating expenses not belongs to operational activity. So I am adding these expenses. If I add these expenses, my profit will be increased. I will come to know what is my cash profit also, because I am adding non-cash expenses. Non-cash expenses in the question. What is the non-cash expenses? First item. What is the first item? Depreciation is given directly in the question. You can write down depreciation 2,50,000. What is the next item in the question? Discount on issue of debentures. This is expenses write off during the year. Actually, this is an accumulated expenditure. We have to write off every year as per the life of the debentures. According to the life of the debentures, we have to write off these expenses to P&L account. Okay. Issue of debentures at discount. They issued debentures at discount initially. That discount is an expenses, but that discount expenses is not debited immediately to P&L account. It should be write off every year. According to the life of the debenture, it should be written off. So this year they are writing off 15,000. It is a non-cash expenses. Non-cash expenses and also non-operating expenses also. Non-cash as well as non-operating expenses. Then what else? Interest paid on debentures. Interest expenses is different from interest paid. If question is given only one item, then you can take it interest paid or interest expenses. If question is having two items, interest paid as well as interest expenses, then you have to consider only interest expenses, not interest paid, because interest expenses only debited to P&L account, not interest paid. Okay. If question is having only one item, interest paid, then assume that is debited to P&L account. Here in this question, they have only one item, interest paid only. What is the amount? 1,75,000. Why I am adding this one? Why I am adding interest paid? Because this is expenses, but not an operating expense. It's a non-operating expenses. Then what expenses it is? Which category I have to present? I have to present under finance category, because when I borrow I have to pay interest. So 1,75,000. 1,75,000. 2,40,000 plus this and this will give you 4,40,000. Okay. 4,40,000 is my increased things. Then minus adjustment for non-cash and non-operating income, minus figures. When I will minus it? If it is a non-cash income or non-operating income, I will minus it, because that income is not belongs to my operating profit. I am going to calculate my operating cash profit. Okay, this income is not belongs to operating profit. What are the items in the question? What are the items in the question? You have two items. One is profit on sale of investment. You have to think your P&L account. You have to think your P&L account. Normally in P&L account all these things are accounted. That is why we are doing reverse work now. That is why we are eliminating. Profit on sale of investment is accounted in P&L account. That is why we are eliminating. That is why we are eliminating. Profit on sale of investment we have to credit in our P&L account. It's another income. But as per cash flow statement we have to arrive only cash flow from operational activity. So I am eliminating. Profit on sale of investment how much? 160 minus 150. 160 minus 150. That is 1,60,000 minus 1,50,000 equal to 10,000. Okay. Why I am minusing? Because it is an income not belongs to operating profit. So I am minusing this profit. Then what else in the question? Interest received on investment. When I will receive interest? If I invest, I will receive interest. If I invest, what activity it is? It is an investment activity. Then it is a non-operating activity. So it is an investment activity, it is a non-operating activity. So I am reducing. How much? 30,000 given in the question. Okay. So total 40,000. I am reducing. Total 40,000. Okay. Then what else? This 40,000 name is what actually? This 40,000, sorry, not 40,000, net thing. 10 lakh plus 4 lakh 40,000 plus 40,000 equal to 10 lakh plus 4 lakh 40,000 minus 40,000 equal to 14 lakh. This 14 lakh as per the format, this 14 lakh name is operating profit before working capital changes. All of you please go through our material format. Operating profit before working capital changes. Okay. Then I have to do some adjustment. Add, minus, all those things. Okay. We will work out in next page. So operating profit before working capital changes is 14 lakhs. Continuation. As per the question, as per the format, what is the continuation? We have to do some working capital changes. Working capital changes. So add what? Add what I have to add? Increase in current liability, decrease in current asset, I have to add it. Increase in current liability, decrease in current asset, I have to add it. So increase in current liability, decrease in current asset. What are the first we will see items? Just go through the question. You have stock, you have sundry debtors, you have cash in hand, you have bills receivables, bills payable. Bills receivable decrease or increased? Bills receivable decrease or increased? Increased or decreased? Decreased. Decrease in current asset, decrease in bills receivable. Decrease in bills receivable how much? I think 5,000. Okay. Decrease in bills receivable how much? Previous year 25,000, this year 20,000. Then what else? What else? You have, what is the next item? Bills payable. Bills payable is decreased actually. Bills payable is a current liability, decreased, then ignore it. What about sundry debtors? Decrease or increase? Increase in sundry debtors. Increase in, only we are seeing increase in current liability, decrease in current asset as of now. Then we will come to the next one. As of now we are seeing only plus items. Increase in sundry debtors how much? 2,650, that is 85,650 minus 83,000, 2,650. What is the next item? Outstanding expenses. Outstanding expenses. Outstanding expenses. Increase or decrease? Increase. Current liability. Outstanding expenses increased. How much increased? 3,500. Add all these things, you will get 11,050. Then come to the minus items, that is decrease in, opposite to this one, opposite to the plus items. Decrease in current liability, then increase in current asset. Okay, decrease in current liability, then increase in current asset. What is the first item? Refer the stock. Increase in stock, how much? Increase in stock how much? 59,000. 6,59,000 minus 6 lakh. Then what else? Increase in sundry debtors. Increase in sundry debtors how much? Increase in sundry debtors how much? 2,550. Previous year 1,04,000, this year 1,06,550. Then what else? Asset is over. Forget about cash in hand. Cash in hand we need not to touch. Okay. Then what else? You have one more item, that is decrease in current liability. What is the decrease in current liability? Bills payable. Decrease in bills payable. Previous year 22,500, this year 20,000. Amount is decreased, that means I repaid the amount, that's why my cash is reduced, that's why I am reducing. Add all these things, you will get 64,0450. Then 14 lakhs plus this equal to 14 lakhs plus 11,050 minus 64,050 equal to 13 lakh 47,000. What is the name of this 13 lakh 47,000? What is the name of this 13 lakh 47,000? Cash generated from operation. Name is cash generated from operation. Refer our material format. Cash generated from operation 13 lakh 47,000 minus income tax paid. It is given directly in the question. It is given directly in the question. What is the amount? Income tax paid. Directly in the question it is given 4,80,000. Okay. Then you will get net cash generated from operations. Net cash generated from operation. 13,47,000 minus 4,80,000 equal to 8,67,000. 8,67,000. Okay. And what is the next heading? What is the next heading? What is the next heading? Cash flow from what activity? Investment activity. Cash flow from investment activity. How many items you have? How many items you have? What are the items in the question? How do we know that? How do we know that? Cash flow from investment activity is already, we have to prepare directly on cash basis. No indirect method. Directly you have to write the cash items. No indirect method for this one. Directly what is received we have to account. Directly what is received we have to account. Only this accrual method is applicable only for operating activity. Only this indirect method is applicable only for operating activity. All other items, no difference between direct and indirect method. Okay. Directly whatever you received you have to write. Investment activity, what is the investment activity? If I made any purchase of investment, then I can write this. So as per the question, land is purchased. You just go through the question. Land is purchased, land is an asset, it is purchased, but how it is purchased? By issuing equity shares with the premium it is purchased. So there is no cash outflow. I am not paid anything out of my packet for purchase this land. So purchase of land nil. Purchase of land nil, even though it is an investment activity nil, because there is no cash outflow, because I issued equity shares for the purchase of land. What else I did? You please refer our P&L account. P&L account, what happened? Profit on sale of investment. What is the sale amount? What is the sale amount actually? Sale amount is how much? Sale is, they sold asset for 1,60,000 rupees. Cost is how much? 1,50,000. Profit is 10,000. Already we have given some effect. Now the question is whether I should write profit on sale of investment or sale of investment here. I have to write sale of investment only. My objective here is how much I received totally. How much cash I received totally. How much cash I received totally. How much cash I received totally. How much I sold. What is my sale value? 1,60,000. That is my receipt. 1,60,000 is my receipt. Not profit I have to write. Profit I need not to write here. Total figure, total inflow only I have to write. Total inflow is 1,60,000, so I am writing here. What else? Any other thing related to investment activity? I have one more thing. Interest received on investment. Interest received on investment. Whether this is also an investment activity, because unless I invested, I will not get this thing. So I got a 30,000 rupees is given in the question. So interest received on investment. So this is also an income. So 1,60,000 plus 30,000 equal to 1,90,000. This 1,90,000 is what? This 1,90,000 is my cash flow from investment activity. What is the next item? What is the next item? Cash flow from financing activity. Cash flow from financing activity. Again you have to link with P&L account. P&L account, is there any related items related to financing activity? And also we have to check is there any other thing related to financing activity. Just go through the question. So one of the financing activity in P&L account is interest on debentures paid. Interest on debentures, I am paying interest. Paid only they are giving. Paid means cash outflow. Received means cash inflow. Okay? Paid is cash outflow, received is cash inflow. If question is silent, we have to take this only one item, this only debited to P&L account, not an actual accrued expenses. What is paid is debited to P&L account. Okay? So paid how much? Outflow 1,75,000 paid. What else? Related to your P&L account? I think over. Nothing is there in P&L account. Then what else? Go through the question. In question what they said actually related to financing activity. Refer point number 3. What they said? 7,500 shares. 7,500 shares. 500 preference shares of 100 each redeemed on 31/3/2019. They repaid 7,500 shares. 7,500 into 100. That is how much? 75,000. 7,50,000 plus 5% in premium they repaid. Further, company also issued 25,000 equity shares of 10 each at a premium of 20%, and they paid the dividend also at the time of redemption. We have to see what is the redemption. What is the dividend for this one? 7,500, 10% preference share means what? 10% preference share means 10% dividend. 10% preference share means 10% dividend. So I have to calculate 7,500 into 100. How much? 7,500 into 100 how much? 7,50,000 into 10%. 75,000 dividend also they paid. And one more point also they gave. Dividend, additional dividend. Dividend paid for the 2000 year 17-18. assuming this 2017-18 dividend is paid on 18-19 and also interim dividend paid on 18-19 again 1,50,000. So these two item is paid on 18-19 only. So with this understanding we have to solve the problem. So interest on debentures paid, so interest on debentures paid already written. Then redemption of preference shares. Redemption of preference shares. How much? How to calculate? 7,500 into 100. How much? 7,50,000. Then premium on redemption of preference shares. Premium on redemption of preference shares. How much? 7 lakh. How much premium they paid? 7,50,000 plus 5%. 7,50,000 plus 5%. What is 5% on 7,50,000? I think 37,500. Okay. 7,50,000 plus 37,500 equal to 7,87,500. 7,50,000 plus 37,500 equal to 7,87,500. What else? Payment of dividend. Payment of preference shares dividend. Payment of preference shares dividend. How much? 10%. 7,50,000 into 10%. How much? 75,000. Payment of preference share dividend. 75,000. Then what else? Issue of shares. Issue of equity shares. Issue of equity shares. How much? 25,000 equity shares. 25,000 equity shares. Correct? Issue of shares at what? At what is the premium rate? Issue of equity shares. How many shares actually? 10,000 equity shares. 10,000 equity shares. Correct? 10,000 or 25,000? 25,000. 25,000 equity shares at 10 each plus 20% premium. So 25,000 into 10. 25,000 into 10 equal to inflow. This is inflow actually. Money is coming inside. 2,50,000. Then premium on issue of equity shares. That is also inflow. That is also inflow. How much? 20%. 2,50,000 into 20%. How much? 2,50,000 into 20%. How much? 50,000. I am showing separately. In insured answer they have given together. I am showing separately here. Issue of equity shares 2,50,000, 50,000. This is also inflow. This is also inflow. Then what else? Minus. This is plus actually. Then minus payment of dividend. Two payment of dividend actually. This is for equity dividend. One is 2.5 lakhs, another one is 1.5 lakhs. Total 4 lakh. This is again outflow. What is the total? 11 lakh and 37,500. Add all the items. Add all the items. Here what is the thing? You have 8,67,000 for operating activity. Net cash generated from operating activity is 8,67,000 plus net cash flow from investment activity is 1,90,000 plus 11,37,500 equal to 80,500 negative. 80,500 negative. What is your opening balance? What is your opening balance? Just go through the question. Cash in and opening balance. Cash in and opening balance is how much? 98,150. Then what is the closing balance? What is the closing balance? 17,650. This is your closing balance. Just refer the question. You will get this 17,650 closing balance. You will get this 17,650 closing balance. Okay. Just see here. So 98,150 cash in hand opening balance, 17,650 closing balance. So our answer is correct. Okay. So with this problem is over. Next problem is from December 2018. Next problem is from December 2018 attempt. December 2018 new syllabus. Okay. I think question number is 3A. Question number is 3A. I also gave the link below for December 2018 suggested answer. Please click the link. PDF will open. Just go through the question. Whenever you are reading the question, you should be able to think what item it is, whether it is an cash item, non-cash item, whether it is an operating item, financing item, or investment item. Okay, just go through the question. We will work out the problem also. Just go through the question.